There's a real fear that a lot of technology companies, as they scale, tap into a less mature prefrontal cortex of men looking for dopa hits, and that prediction markets are sort of the high IQ version of gaming apps, and that it preys on a dopa hungry male. What's the demographic profile of your average customer, and what is different from prediction markets from just flat out gambling?
The vast majority of volume is really in the bucket of 25 to 45 years old. I think the concern that you sort of outlined is a real concern. This concern applies to any financial market. I think it applies to day trading of options, retail trading. I think it applies to crypto. It applies to traditional gambling and sports betting. And that risk exists in prediction markets. I think prediction markets is a much healthier mechanism than a lot of these other mechanisms. I think a lot of the issues have come from the gambling industry. And I think you got to look at the incentives in that industry. When you go to a casino or you go to a traditional sports book, the revenue of that company is equal to the customer's losses. If ad comes to me, the business model is figuring out how much money can I take from ad. Well, what you're going to figure out is like, okay, I have Ad and Scott as customers. If Scott is a winner, I'm going to block Scott from participating because anything that Scott wins, it's going to take from me as a business. And if Ed is a loser, I'm going to figure out how to get Ed hooked in the platform. It's a perverse incentive. And, show me the incentive, I can show you the outcome. Basically, you're going to get people hooked and dopamine hits are going to basically be, increasingly bigger part of the platform. Prediction markets just don't have the inherent incentives. I take a small fee and Ed is not trading against me. Ed is trading against Scott. It's inherently just more social.